points after starting a little higher than that. All right, our market master of the day is Pratik Gupta. He's Chief Executive Officer, Co-Head Institutional Equities at Kotak Securities. Thanks very much, Pratik, for joining us. Great to have you here. Prashant this side. Let's just for a moment assume that we get what economists are expecting the Fed to do. 50 basis point hike, sort of clear plan with regards to reducing the size of their balance sheet. Just look ahead for us. Are conditions going to remain very tough, or do you think maybe a lot is in the price and we may see some reversals here?
Hi, good morning, Prashant. I think that's a great question. The Fed is actually the main overhang on the market for India. As you know, our market is being driven, the upside has been capped more by the foreign selling that we've been seeing over the last several quarters. And that, unfortunately, I don't think is going to change anytime soon, irrespective of the Fed decision, whether it's 50 or 75. You may get a bit of a relief in terms of slower FII selling, but at Kotak, when we speak to global investors around the world, the unanimous refrain is we like India from a long-term perspective. The medium-term outlook is also great. But in the short term, unfortunately, India, we are standing out like a sore thumb, sticking out like a sore thumb, wherein our valuations we're trading at about 20 and a half times 1 year forward earnings. That's quite expensive, very expensive compared to the rest of the EM universe out there. Compared to China, ASEAN, we are very expensive. Those markets have significantly underperformed. Just to give you some numbers, India is down only about 2% year to date, whereas the S&P is down about 13%, NASDAQ is down 20%, China is down 14-odd%, the MSA EM index is down about 11%. So we're really massively outperformed. So in that sort of an environment, to expect incremental money coming into India is quite difficult. So that's one aspect. Now, having said that, I think what we also need to keep in mind is, as you rightly pointed out, you could potentially get the Fed being more hawkish than what the market is pricing in, especially given that the street is still not convinced that the Fed will go through with all its rate hikes, given the risk of a slowdown in the US, given the risk of a recession. But equally, there is also a lot of folks who are quite worried that this time inflation has become so well entrenched, it's running so far ahead. Getting even up to the neutral rate won't be enough. The Fed will have to go well beyond the neutral rate, and the balance sheet reduction in particular will have a very disruptive effect on markets, and that's something we're not prepared for. So I would say overall, we're still a bit cautious, not yet time to be bullish in the short term. The longer term outlook still looks good, but in the short term, we would still be cautious on India.
Okay, cautious on India. By the way, just look at Hero MotoCorp. It's actually now in the green, and how I don't. This is market's trend actually. The market is now looking at valuation comfort, and that's been driving some of these stocks of late. Just wanted to point that out. Pratik, good morning. Just going through since I raised the valuation topic, in your model portfolio, you've removed Titan. And you've added weight to IT services. Now, give the rationale to us. Titan, I can assume, could be because of valuation. But on IT services, is this because of the 20% decline that we've seen in stock prices, or something else? Because there's been some bearish views on IT after this quarter's number, especially on the margin front.
Hi, good morning, Anuj. You're absolutely right. From our research team's perspective, we have actually reduced our weightage, recommended weightage on IT services, mainly because of the decline in stock prices. The IT index is down about 20% year to date. So a lot of the negatives are already being priced in. And we think there is some cushion in the case of IT in the form of higher, potentially a weaker rupee going forward. Our modeling is done at the currency exchange rate of about 75.5. The rupee is already at 76.5. And if you look at what's going on with the Japanese yen, which is down almost 20% year to date, the Chinese RMB is actually moving down. A lot of the other EM currencies are moving down. And if the Fed ends up being even more hawkish than what the street is expecting, you will continue to see a strong dollar, which in turn will put pressure on EM currencies. And therefore, the rupee should also weaken, which in turn should be positive for IT services. But I think the main factor here is, apart from valuation, also is the still relatively longer term positive outlook for IT. The migration to the cloud, the applications for cloud, there is still a tremendous amount of demand. And we think this is not going to end up, in sort of weakness in the near term. So, and especially given the other risks to the other pockets of the market, IT still looks relatively okay. So that's the main reason why we've actually increased our weightage on IT.
Okay, increase the weightage on IT. You've also increased your weightage in some of these large cap banks like Axis Bank, Pratik. Wanted to ask you about that because what we've noticed in this quarter's earnings is that growth has held up for many of these banks. Asset quality trends are intact. Do you think it can get better from here?
Absolutely. I think the banks is one segment of the market which, from a valuation perspective, it's still not excessive compared to many other sectors in the market. And as you rightly pointed out, credit costs are coming down. The worst of the asset quality issues are behind us. A lot of these banks are very, very well capitalized. And we think as and when the economic recovery gains momentum over the next couple of quarters, some of these leading private banks or even one or two of the top PSU banks, they'll do extremely well in the next 1 year, 2 years sort of time frame. They have a very strong liability franchise as well. So the cost of funds should remain under control. So even in a rising interest rate environment, they should do quite well. So we like the banks. They remain our preferred sector. But I would say among financials, it's not just the banks. One can also look at insurance companies also, which have underperformed quite significantly over the last 6 to 12 months. And now there was an overhang because of the LIC IPO. That's also sort of getting out of the way. So insurance is another segment apart from banks, which we like in the financial space.
Pratik, so you mentioned LIC. I mean, what is the interest levels like without kind of offering an opinion whether to subscribe or not? Broadly, I mean, you'll have a sense.
Sure. I guess I can't say much, but all I can say is the interest seems to be quite strong. You've seen the anchor list which came out. So overall, it's shaping up to be hopefully quite a successful IPO.
Largely domestic list there on the anchor side?
Sorry, domestic interest in...
Yeah. I mean, limited foreign interest in that anchor book.
That's right. So it's mainly domestic as of right now. But I think you've got to keep in mind, as I said in the beginning, India as a whole is seeing very low interest from foreigners. Most foreigners are still generally trimming their positions in India and generally either moving back to the US or investing in China or ASEAN, which are much cheaper markets. So it's a tough environment for any large IPO or even small IPOs or in general, even for the secondary market as a whole. So it's not very surprising to see more of local interest rather than foreign interest right now.
Pratik, is it too early to be in this buy the commodity users trade and sell the commodities? Because it's always tough to time it. But in terms of value, there are some stocks which are offering value because of there's so much pressure as raw material costs have increased. But your thoughts?
Yeah, I think, Anuj, you're right. It's a little bit too early, but one can never time it. So it really depends on your investment time horizon. If you're looking at a 1-2 year time frame, then it's okay. You may as well take the pain for a quarter or two. But in the short term, I think it is a bit too early. There is the valuations need to correct a little bit, and more importantly, the demand environment still hasn't picked up. Let's say for the consumer discretionary stocks, like whether it's the passenger segment, even the two-wheeler segment, or you look at consumer durables, which are big commodity users. So it's still a bit early in our view, and but again, it really depends on your time frame, how cute you want to be on the timing.
Okay, got that. It's very hard, right, to time anything in this market, as we would all agree. Well, the other stock I noticed in your model portfolio where you've increased weightage is Bharti Airtel. And it has been quite stellar for Bharti, right? If you look at the latest subscriber data as well, Bharti now stands at 350 million total subscribers. And its share of active subscribers is still the highest at 98% amongst the three operators. So are you bullish on the space as a whole? And even within that, do you think Bharti will continue to outperform its peers?
Yes, we do. And that's we do like the stock. In fact, we like both the major incumbents. As you rightly said, one is the strong subscriber ads, but I think more than that, the main driver for these stock prices is going to be the ARPU increases, which I think will be quite steady going forward. And the industry consolidation's already happened. Even if the third player, Vodafone, sort of gets financing and so on, they'll still remain a very weak competitor. So the top two incumbents, they should do really well. and also in a market environment where there's a lot of uncertainty around the global economic environment, around oil prices, around the Russia-Ukraine war, etc. And you've got the Fed uncertainty as well, which impacts some of the consumption-oriented stocks. Telecom is actually a safe place to hide, and fundamentally as well, the long-term outlook is quite good. The only caveat I would put over here is watch out for the 5G auctions. Our assumption is either the 5G auction pricing will be quite reasonable, and or the players will not bid too aggressively, and they won't sort of participate. And that's been the public stance from most of these companies, that they will not bid aggressively. But that's a bit of a risk. Otherwise, the telecoms companies at current valuations look quite attractive, and we like Bharti as well.
Okay, Pratik, very interesting. You're removing or cutting weight in both Aarti and SRF. You get a sense that the specialty chemicals run is over?
No, I don't think this is a sort of strategic long-term call. On the contrary, I think the specialty chemical space has a long runway for the next 10, 15 years. We think we will continue to see very, very strong demand. This is sort of like the IT services sector back in the 90s. You are seeing a shift of demand coming in from global customers who want to have a China plus strategy. And a lot of our Indian companies, the chemical companies, the basic problem for them is really capacity expansion, management bandwidth, how well they can execute rather than demand. It's not really so much of a demand problem from a longer term perspective. But yes, there are some short-term issues. One is the run-up in these stocks has been very sharp. So from a valuation perspective, most of them are not cheap. And second, in some specific cases, there is also the raw material impact, which may impact earnings in the short term. But structurally, we still like the space. It's just more of a tactical short-term correction.
Okay, we will leave it at that. It was really a pleasure speaking to you, more because we generally hear a lot about the overall markets, but you drilled it down to the specifics and helped us navigate through sectors and stocks. Thanks a lot, Pratik, for joining us and giving us your view. Well, for the market, it is quiet, you'd have to say. The mid-cap index is up about 0.5%.